To prevent an unwelcome and unwanted surprise as a consulting firm owner, you must remain on top of your tax liabilities throughout the year. Here's the thing, paying taxes as a self employed consultant is sure to happen as you scale your firm. There's no way around it. Even though there's no way around it, you can prepare for it so that you have a stress free, worry free tax time and you maximize your tax deductions. And in this episode, I will show you how. I am Octavia, CEO of Say Yes to Profits. Say Yes to Profits is a virtual CFO firm for consultants who desire to manifest, maximize, and maintain profitable $1 million firms. Now, this episode is sponsored by the Tax Ready Organizer for Consultants course. This course was designed to help consultants and consulting firm owners maximize their tax deductions while experiencing a stress-free, pain-free, worry-free tax season. Enroll today by visiting sayyes2profits.com and click the Academy tab. Once you become a self-employed consultant, one of the first things you must understand is that you will be responsible for paying taxes in two ways. Yes, unfortunately, two ways. You have self-employment taxes and income taxes. In addition, as a self-employed consultant, you must file an annual tax return and pay estimated quarterly taxes. And you and your business will pay estimated self-employment and income taxes to the IRS through quarterly tax payments. We're going to talk a little bit more about that in just a moment. I've also included a link in the description for you to access a video I created that walks you through how to calculate and pay estimated quarterly taxes. So make sure that you check out that video. Now, for self-employment taxes, the tax rate is 15.3%. The rate consists of two parts, 12.4% for Social Security and 2.9% for Medicare. When you were an employee, you were only responsible for 7.65%, and this was normally paid for employee withholdings. As a business owner, however, you are now responsible for the total amount, which is, again, 15.3%. Now, there are steps to budget for taxes, and I want you to listen to all of the steps because you gotta pick the one that's gonna work best for you and your consulting firm. Now, the first step to budgeting for taxes is to prepare and maintain a profit and loss statement for your consulting firm. The best way to prepare a comprehensive profit and loss statement is to have accurate accounting records. I'm pretty sure you knew I was going to say that. You also probably know that I recommend that you hire an accounting firm to maintain and discuss your monthly financial performance. The right accountant will be able to help you consistently understand your tax liabilities and strategically maximize your tax deductions. You honestly do not want to wait until the end of the year to try to figure all of this out because you have more than likely missed a lot of the deductions and things that you could have done throughout the year in order to have a stress-free tax season, okay? And as a side note, maximizing your tax deductions should be completed and discussed daily or at least monthly as you're operating your business. Now, the next step to budgeting for taxes is to save a percentage of your net earnings in an interest-bearing business account. And there are 3 ways to determine the amount to save. Now, option number 1, you can forecast your firm's annual revenue and expenses. Once you have a forecasted amount, you will then determine if you will have a net profit or a net loss. How do you do this? Well, you forecast your revenue, you forecast your expenses, you subtract your expenses from your revenue. What is left over is either a net profit, meaning you earned more money than you spent, or a net loss, meaning you spent more money than you earned. Now, if you are likely to have a net profit, you will save between 30% and 40% in a separate interest-bearing bank account for tax purposes. So that's option and way number one. Option number two. As I mentioned previously, your accountant should prepare your monthly profit and loss statement. To budget for taxes, you will save 30 to 40% of the net profit showing on your profit and loss statement in an interest-bearing savings account. Option number three, if your bookkeeping is not in order, because, of course, that happens, right? Unfortunately, I recommend you review all of the payments received from all of your clients throughout the year. Once you have an amount, you will then save 30 to 40% of each payment or of that total amount in an interest-bearing savings account. Now, the drawback with option number three is that you're not factoring in your tax write-offs, your tax deductions that you qualify for and that you're probably using throughout the daily operations of your firm. With option number three, this allows you to save most times a bulk amount, and then when it's time to file your taxes, you may owe less than what you saved, right? Now, what happens if you underpay and underestimate your quarterly taxes? Well, great question. If you didn't pay enough taxes throughout the year, either through withholdings, and remember, that's when you are an employee, or by making estimated quarterly tax payments, you may honestly have a penalty for underpayment of your estimated taxes. Now, according to the IRS, if you pay at least 90% of the taxes owed for the current year or 100% of the taxes shown on the return from the prior year, you may avoid an underpayment penalty. The IRS also recommends that taxpayers make estimated tax payments in 4 equal amounts to avoid any penalties. However, let's suppose you receive income unevenly throughout the year. In that case, you may be able to vary the amounts of the payments to avoid or lower the penalty by using the annualized installment method. The bottom line with tax underpayment is that you will know at the end of the year if you didn't pay enough in estimated quarterly taxes or you paid too much. You're gonna know by when you prepare your tax return and you owe more than what you have paid, or you've paid enough and you're due a refund. You can also complete Form 2210, the underpayment of estimated tax by individuals, estates, and trusts to determine whether you've underpaid or not. But what happens if you overpay? Now, if you overpay your quarterly taxes, you will receive a refund from the IRS. Okay? So here are some next best steps I want to leave you with. I want you to begin saving the 30 to 40% that I've mentioned several times throughout this episode right now. Get clear on that amount and save that amount immediately. Also, I highly recommend that you enroll in the course today because it's going to teach you how to maximize your tax deductions this year. It's going to teach you how to have a stress-free, worry-free, pain-free tax season right now, okay? So go to SayYesToProfits.com and click Academy and enroll today. If you have any questions or comments, definitely leave those below. And don't forget to subscribe right now, share, and like this video. This is Octavia, and until next time, say yes to profits. Toodles! Thank you for tuning in to another episode of the Say Yes to Profits podcast. Download your free gift from this episode by clicking the link in the description. Also connect with me on Instagram at Octavia Conner, CFO. And if you would like a glimpse into how we help our consulting clients manifest, maximize, and maintain profitable $1 million firms, schedule a discovery session today at sayyestoprofits.com/session.